Hello to all of you, our dear friends, our dear subscribers. Today is 19th of February and we are ready to present our point of view of how we trade major currencies in the world financial markets right now. Today we'd like to concentrate your attention around the euro currency and especially around the euro-dollar pair. There are a lot of talks and a lot of advices, let's say so, advices to sell the euro at current levels on any kind of rebound and to expect it much lower from here. Of course, we should understand that for a period of 4 months already, the euro currency is trading around the tight range of 112 per 115. Every time we enter an area of above 115, the euro meets a kind of really very strong offers. At the same time, of course, every time we are plunged below the level of 113, there are a kind of more or less strong bids for the currency. Anyway, there are now a lot of talks that in the coming weeks and probably even days, the euro-dollar could finally break the level of 112 and push further to the downside. Is it a kind of correct scenario, or probably these people are mistaken at the moment? Let's try to answer this kind of tough question. We suggest and we based our scenario on the assumption that euro-dollar will not fall so much and even could remain above the level 112 for the foreseeable period of time, for the coming weeks and days. We suggest that our assumption is based on the fact that also the United States economy could enter a period of a really bothering economic slowdown, and in that case probably the Fed will put into a backward position, probably a position of lowering its benchmark interest rates. Of course, there are a lot of talks that in case the Fed starts its policy of reducing its interest rates, also the European Central Bank should follow the major central bank, the Central Bank of the United States, in the same way. And that will mean that probably in the coming year, probably during a period of 2019, for example, the yields of such kind of government papers like German bonds, 10-year benchmark German bonds, the yields could fall below the zero level. Now we are trading around more or less around the 0.1%. Of course, it could be. Anyway, we suggest that the situation is not so pessimistic regarding the euro currency. Also, there is a kind of big opportunities we suggest right now for such kind of currencies like commodity block of currencies. Among them we discuss Australian and New Zealand dollar, the Aussie and the Kiwi. We suggest that sooner or later finally United States and China could sign a trade agreement, and that would mean that probably time of trade wars could be behind us. Of course, it's not a kind of a very easy process, and also here there are kind of cornerstones, like for example talks that after a trade war between the United States and China, the next victim will be European Union, because in that case probably after the China, the European Union will come into the scene, and in that case also the trade relations between the United States and Europe could even worsen further, and of course it will not bode well. It will not bode well for the euro currency, and in that case of course the beneficiary will be the United States currency. Anyway, from technical point of view, let's see the chart, for example, of the Aussie dollar. By the way, now the Aussie dollar is really very close to its immediate kind of bullish trend, and probably for short-term kind of traders, it's a time to buy the Aussie dollar around current levels with a really very tight stop loss. We suggest that the level of moving average 200 daily line still should remain a kind of pivotal point to break to improve the bullish perspectives of the currency. Also, the same could apply, by the way, for the euro sterling. Absolutely different, absolutely another kind of currency. Anyway, let's discuss a little bit. Of course, there are a lot of talks about the Brexit negotiation process. We should understand that it's really very important. Anyway, from technical point of view, there is a kind of interesting resistance zone around the level of 0.8850. That's why, by the way, in our section of euro crosses, we suggested to change our trade policy regarding the euro sterling. Now we will sell it on a possible uptick to 8850, but with a stop above the confluence of two moving averages, the 100 and 200 moving averages. But anyway, we will resell the currency at another support resistance zone of 8950, where is, by the way, another strong resistance zone. Our assumption is based that 2019 could be a year of the cable, could be a year of the British pound, in case, of course, the resolution of the Brexit negotiation process to the better side. That means that finally, before the so-called deadline that's scheduled for March 29, European Union and UK finally will sign an agreement. And in that case, of course, the cable could receive a kind of really strong push to the upside. That's our fundamental point of view regarding the currency, regarding the UK currency at the moment. Right now, the situation still remains quite tight for a lot of currencies. They continue to trade in really very small ranges. And also from the point of view that this week is really very empty, has an empty economic calendar, probably the market will concentrate on technical analysis and will concentrate on trade negotiations between United States and China. We wish you a pleasant and profitable day ahead, dear subscribers. Take care and bye-bye for now.